This is the biggest deal we've seen from a U.S. bank since the financial crisis. Yeah. It's certainly a big deal for Morgan Stanley. Why was E-Trade the right deal for you as opposed to growing another part of your business like asset management?
Well, firstly, Sonali, thanks for coming by. It's a great day for our firm. We've had a strategy in place for a long time to continue to diversify and build out our balance sheet-like businesses. The Smith-Barney transaction, of course, was historic back in 2009. Solium we did. Mesa West was a small asset management deal. I've always felt that E-Trade was an incredible brand, an incredible company, had great technology. We're clearly doing stuff on the digital side at a pace that was ahead of where we were. So we had that constant debate of sort of build versus buy. And, we felt we're in the condition to make a bold move, and we went for it.
So why was E-Trade the right business as opposed to a newer business as well? You said digital was a big deal for you. Had you considered a Robinhood?
Well, I kind of like E-Trade's business model. I mean, they've got a lot of clients. They've got a huge workplace stock plan business. They have one of the best digital online banking businesses in the marketplace, and they sit on $600 billion of assets. So added to us, that's $3.1 trillion. You add their stock plan business to ours, we're sitting on $600 billion. We have $21 billion now in combined wealth management revenues, takes our margins above 30%. It's not comparable. Robinhood is a completely different kind of business. So I like real businesses, real clients, real revenues, real profits. They've got all of it.
Real clients, but these are much different clients than Morgan Stanley has traditionally taken on. How does this change the fabric of Morgan Stanley?
Less than you would think. In fact, meaning I don't think it changes the fabric of the company much at all. Less different clients than you would think. The stock plan clients are frankly all corporate institutions. So that's not different at all. And for many of us, having advisory relationships also have online accounts, whether it's with our banks or with a financial institution providing financial advice. So I think the channels in the last 20 years, my observation is the channels have come together. What you've got to do is build businesses that make your clients happy, right? Be convenient for them, not convenient to yourselves. And for our financial advisors, already our clients, including myself, are constantly working electronically, digitally, with my financial advisors, with Morgan Stanley. So I think the channels have converged.
So $13 billion, this is a pretty hefty price tag for E-Trade. What do you tell the people on Wall Street who might believe you are overpaying?
I think they're jealous. That doesn't bother me at all. I mean, listen, we paid a $3 billion premium last year. We made $8 billion in revenue. So it's about 4.5 months of earnings. That's one way to think about it. We just put at risk 4.5 months of last year's earnings to buy an iconic institution with $600 billion of assets, $3 billion of revenues that's going to improve all of our financial models. This is a no-brainer from that perspective.